Welcome back to Morning Trade Live. It's time now for the big picture. Let's welcome in Coop Howard, Director of Fixed Income Research and Strategy, Schwab Centre for Financial Research. OK, so the bonds are back to work today. We're seeing a little bit of slippage there for the 10-year. What are you watching as far as fixed income is concerned as we see some progress now with this House vote to end the government shutdown, Coop?
Yeah, a little bit of slippage in the 10-year today, but it is still continues to be range bound. And I don't think that that's too big of a surprise, Sam. That's something that our team has really been discussing for quite a bit. And I think one of the reasons why that it's been range bound is because of that lack of flow of data, because of the government shutdown, like you mentioned. So expectations, though, is that that should likely end today. So it looks like the House is likely on track to vote for it. If that comes to fruition, then our team expects that we should probably get a release of the flow of information from the BLS either later this week or early next week. So maybe things could potentially change and start us to break us out of that little bit of a range.
I was talking to your colleague Kathy Jones earlier this week as well, and she was sort of thinking that maybe the Fed does sit on their hands come December, just because even though we might be getting that data, there might be a bit of a question mark around how much they've actually managed to collect, given that we did have a US government shutdown here. Now, I did put that to one trader yesterday who sort of suggested that the markets wouldn't like that given the current pricing in. And then you've also got this journal report out earlier that I mentioned at the top of the show about how the Fed is increasingly torn over a December rate cut right now. So where do you see things going from here? I mean, what is your team sort of penciling in as far as what happens next?
Yeah, so we do believe that December is very much up in the air. And I think that Chairman Powell reiterated that during his press conference the last time that they cut interest rates. So even though we aren't getting that flow of information, I do think that things are still a question mark. And it's not like all of a sudden the government's going to open and then we're going to get that release. They're going to need to bring employees back or workers back. They're going to have to collect the data, make sure that it is all looking statistically accurate, and then that's likely to go get released. So it is going to take a little bit of a time to get that. Now, the market is pricing in about a 2/3 probability of a rate cut at December. I think it's more like a 50-50 coin flip. And then even looking out further from there, our expectation is that the Fed is going to move at a very cautious pace because, like I'd mentioned earlier, inflation still does remain above their 2% target. And yes, the labor market's slowing, but the economy continues to be holding up okay. So I think that that's one of the reasons why it gives them a little bit of runway, a little bit of time before they begin to cut rates again.
Yeah, I'm just looking at the ton of Fed speak that we're getting today as well. I mean, Williams already spoken, Paulson, Waller, a couple of others, Bostic, Myron. I'm just wondering, in this sort of data vacuum that we've been in, and also ahead of this 10-year Treasury auction today, what you're looking out for as far as what they're likely to say, and also some of that demand for obviously some of the 10-year Treasury auction too.
Yeah, so I would expect that what we'd hear from Fed officials is kind of a mixed bag, depending on who you listen to. And that was really represented in the dots that we got last time, because one of the things that was notable to me is how much dispersion there was among the dots. So if you looked at Myron on one end, he wanted a significant amount of rate cuts. Even he dissented in the last meeting because he wanted more rate cuts. Whereas we had another Fed official who dissented because they wanted to hold interest rates at where they're at right now. So, or prior to not cut, I should say. So I would expect that Fed officials are going to continue to kind of be split on where they see things going. And the government shutdown, the lack of data just further complicates that. So hopefully when things open up, we're going to get a little bit of clarity, but I don't expect that the fog should lift right away.
Okay, we'll be watching. Thank you so much for that. As always, Cooper Howard, Director of Fixed Income Research and Strategy, joining me there, Schwab Centre for Financial Research.